Financial friends, hello, and welcome to another riveting episode of Capitalize by Phillip Capital, the podcast where we bring to you some of the wildest stories from across the world of finance. I'm your host Ayushi, and today we embark on a fascinating journey of the company known as Suzlon Energy. From the highs of being one of the world's top 5 wind energy providers to the lows of having to sell its crown jewels just to stay afloat, the twists and turns that come with this story are nothing short of a roller coaster. Imagine a company languishing in obscurity for a decade, suddenly igniting investor interest. In fact, in the past year itself, its share price skyrocketed from 9 to 24 rupees, signaling a colossal 150% surge. Retail investors now see a potential turnaround, a phoenix rising from the ashes of years of losses. In today's extended episode, we unravel the complexities that define Suzlon's journey, exploring the highs and the lows that make this story truly extraordinary in the world of finance. So without any further ado, let's dive in. Many businesses start by entrepreneurs solving problems that they face themselves, and in this regard, Suzlon Energy is no different. It's the 1990s and Mr. Tulsi Tanti, the would-be founder, is in the textile business. But business is at a low as operating costs are too high due to expensive electricity and frequent power outages. In his exploration for new alternative ways to fuel his business's need for power, Mr. Tanti bought 2 wind turbines and started producing electricity himself. Noticing his nifty solution, other businesses wanted to be on this bandwagon, which inspired Mr. Tanti to exit the textile business and enter into the energy sector with a brand new name, Suzlon. Cut to 1995 and Suzlon Energy was formed. Suzlon Energy, under the vision of Mr. Tulsi Tanti, quickly ascended to greatness. Within a decade, it became Asia's #1 and the world's 5th largest wind energy company, with its IPO in 2005 standing as a crowning achievement, not just for Suzlon, but India as a whole. However, things quickly began to unravel in 2006 when a strategic decision was made to provide holistic wind energy solutions. Mr. Tanti's ambitious move to expand Suzlon's offerings led to the acquisition of key gearbox company Hansen Transmission in 2006 and Germany's premier wind turbine maker Senvion in 2007. But with an unconventional approach of securing acquisitions before funding, Mr. Tanti placed a heavy strain on Suzlon's finances. And when in 2008, financial crisis struck, sending across shockwaves through the global financial landscape, things started taking a turn for the worst. First came reports of poor blade quality, low order fulfillment, top management departures, and strategy going awry. Then in 2012, the stunner occurred when Suzlon failed to make convertible loan payments of $209 million, resulting in India's largest convertible bond failure. The government's withdrawal of incentives for wind energy further compounded their challenges. And the absence of government tenders from 2011 to 2015 for wind power projects strained Suzlon's operational profitability to its limits. Faced with the mounting burden of debts, Suzlon embarked on a journey of drastic measures. Aggressive asset sales, including their crown jewel Senvion, became crucial in reducing their loan burden. By 2021, Suzlon successfully reduced its loan from a staggering 20,000 crores to less than 2,000 crores. The passing of founder Tulsi Tanti in October 2022 marked a pivotal moment for Suzlon. Vinod Tanti stepped into the role of a chairman and managing director, with Girish Tanti, Tulsi Tanti's younger brother, also returning to the company. Under Girish Tanti's leadership, the focus of aggressive asset selling continued, further reducing the company's debt burden. While Suzlon has managed to alleviate its debt concerns, the recent surge in interest is largely driven by optimism surrounding government initiatives. With commitments to issue 10 GW wind tenders annually by 2027 and 28, and a push for green hydrogen, Suzlon can rise. However, to complete a turnaround, the company must transition from hopeful anticipation to tangible business growth. Diving into its financial metrics, Suzlon's revenue and profit trajectory over the past 3 years reveals both promising and cautionary signals. While the compounded growth in revenue and profit stands at 27% and 97% respectively, the company has yet to surpass its 2018 revenue levels. As we look at the competitive landscape, Suzlon's market share, which plummeted to 5% in 2020-2021, from a high of 40%, becomes a focal point. Foreign companies like China's Envision Energy and USA's General Electric have seized opportunities where Suzlon has failed. It's clear to see that the market perception, influenced by operational performance, will play a decisive role in Suzlon's journey ahead. As we draw to the end of this rise and fall chronicle, we just want to state that it's essential for investors to grasp the intricacies of the finance world and understand the fundamentals before making any decisions. I just want to call out to all of the capitalized listeners hearing this that this video is just for knowledge sharing and has no influence on investment and trading decisions of investors. And we're only bringing the story to you because it was an interesting one. Thank you for joining us today in this extended exploration of Suzlon Energy's financial journey. Share this episode with your fellow finance lovers and don't forget to hit the bell icon. Subscribe to Capitalize for more in-depth financial narratives. Until next time, I'm your host Ayushi signing off. Stay informed, stay curious, and stay financially savvy.